All right, trade pros, let's do this. Good morning, everyone. Welcome to our morning market update for Wednesday, July the 11th. Vic, can you get the door if you don't mind? Wednesday, July 11th of 2018. This is George from Trade Pro Academy. We're closing the door because we're about to get serious. No, I'm just kidding. We're going to talk about further escalation today from U.S. and China and the trade war and what that means for you as a trader, how China could retaliate. And I'm going to suggest one way that they could make a move and recapture all these tariffs that are going to absolutely hurt a lot of things in the United States. So we're going to talk about that. Latest developments. We're also talk about some news this morning out of the ECB, the European Central Bank. Also some PPI news for inflation, and then we'll call it a day. All right. Plus the squawk that just came in at 8:55 in the morning that made the markets sell off at least 5-6 handles. How much did it drop there, Vic? Right on that news. Yeah. Bit more. 7-8 points just based on one squawk. All right, so in Asia, Japan's down 1.2%, Hong Kong's down 1.3%, China down 1.8%, and India flat for the session. Asian markets obviously weak because a Bloomberg report circulated last night going into the close of trading in the U.S. session around 4:30. So we had 45 minutes or so before the futures closed, and they were absolutely getting crushed on this news. The news was that Donald Trump is gathering a list of goods to slap a further tariff on coming in from China. So more import fees, if you will, or duties or tariffs, whatever you want to call them, on Chinese products, totaling $200 billion. And that was later confirmed just moments later after that Bloomberg article that, yes, they are in fact doing it. It wouldn't be effective for a 2-month period. So it doesn't start until 2 months from this week. It could be announced as early as today, the official list, but as late as next week, and it'll take 2 months to set in force or in motion. At this point, we don't know if it's an actual intention to put these tariffs on there or just a negotiation tactic because they have 2 months to do it, but the market's not reacting favorably to this, as you would expect. In Europe, at midday, London's down 1.5%, Paris is down 1.2%, Frankfurt down 1.3%. So European equities weak as well on this news. In the United States, Dow is down almost a whole percentage point. S&P is down 0.8. NASDAQ down 1%. Markets are getting hit all across the board. They're all red. The only market that's green is India, and India is up 0.1%. It's probably the Nifty that it's quoting. Crude oil down 0.7%. Report this morning surfaced that OPEC's leading producer, Saudi Arabia, has in fact increased their output to comply with some of Donald Trump's demands. That's a super bearish thing because they have a deal. Think about making a deal with somebody, or think about taking a girl or your boyfriend to a prom if you're a female, and suddenly they say to you, oh, guess what? I'm sort of going on a date with somebody before prom night. We should be done by 8, though. Come pick me up. It's a little bit worrisome, right? So OPEC or Saudi Arabia is complying with some of Trump's demands where they have their own pact and agreement with OPEC and non-OPEC producers. That's bearish for oil. Looking at the news this morning, one of the big indices rather of the day, or one of the big economic events of the day, was producer price index. It's called the PPI, and it's up 3.4% on an annualized basis versus 3.1 last year. That's the fastest or the biggest surge since 2011. All right, so in the last 7 years, it's the biggest increase. This is not good, actually. An increase in this economic indicator is not good. That means producers are paying more for production of their goods, which means what? They're going to pass that price down to the end user, so consumers are going to end up paying more. So costs are going up. This is an inflationary measure. Inflation is showing signs of increasing a little bit quicker now. So the things that went up are energy, goods, and trade services. Food prices surprisingly dropped 1.1%. I don't know what kind of food they're quoting here, but I know I'm going and buying green peppers for $3 each Canadian. So I don't know whose prices food prices are going down, not mine. 10 a.m. we got wholesale trade, Atlanta's Fed business inflation expectation survey. 10:30 we got a huge day for oil inventories. It's oil inventory day, the day where in 1 hour or less you could make your entire weekly profit target. Just trading this in the room. We traded live with our group. I can't wait. All right. Also at 3:30 p.m. ECB's U.S. Feds Williams is speaking. and that's at 3:30 p.m. I have no intention of being by the market at that time. European Central Bank this morning made an indication that they may raise rates sooner than expected. So if those of you that are currency traders, that's why the euro is skyrocketing this morning. Bank of Canada has an announcement today, don't they? 10 a.m. Bank of Canada's got a rate statement announcement today and a press conference. We'll be trading the 6C futures, the currency futures, or the CA6 futures on the CQG terminal. But in terms of that, the reason stocks are down, the administration for Trump is saying they want to get a list of $200 billion worth of goods to put a 10% tariff on. It's going to target their importing, manufacturing, and exporting industries. They're going after electronics, textiles, metal components, and auto parts, all really big sectors, really big business for China's exporting. All right, food and personal sectors are also set to be affected, as well as beauty goods and makeup products. So the team that gets here in the morning early to put all this makeup on me so I look like this, their costs are going up. China calls these actions completely unacceptable, and they say they're going to complain to the WTO. It's kind of like your brother or sister saying, I'm going to tell dad on you. It's like, I already talked to mom. But anywho, they're going to complain to the WTO. And China imports $130 billion worth of goods from the United States on last year's basis. So they don't really have $200 billion of goods to retaliate on. So this is why this tariff round was a lot scarier than any other, because it puts China in a situation where they're going to have to do something outside of tariffs to respond. They've said that it's completely unacceptable, and they vow to retaliate to 100% extent to match the same amount of tariff or income. So how do you reclaim some tariff income when you don't have that many goods to put a tariff on? You take other measures. You devalue your yuan, and you could do that through central banking. You increase liquidity into the economy. You sell some treasuries from the United States, which gets a little bit more severe. And I'll give you guys one move that China could do that's going to absolutely screw with the United States. I don't know if they're going to do it. It's not a nuclear option. I did the math. If you throw a 25% tariff on all Apple iPhones sold in China, that makes up your entire amount of tariff. In this case, though, they're picking on one company in the United States and not on the overall administration. But at this point, they've been pushed to the level at which they can't respond. There's no more tariffs to put on goods. China only imports $130 billion, so they're going to have to do something else. That's a very severe measure. What Apple would do in that situation, how they would respond is they would move their manufacturing offshore, move it to another jurisdiction to avoid the tariff, and an administration that's after creating jobs is now actually chasing them away based on that. So that's one of the potential solutions, and you could expect them to get creative. They just tweeted at 8:55 in the morning. They didn't tweet. China doesn't tweet. But a report came in at 8:55 through our newswire that said China reportedly considering non-trade measures to retaliate against U.S. tariffs, could delay merger approvals as one such tactic. They're also known to be, there's reports that they're delaying the exporting of goods, or they're sitting on shipping docks, not making it to the United States because they don't know what kind of tariffs they're going to face on delivery. That's called COD in the shipping industry, cash on delivery. So they don't know how much they're going to have to receive for these goods, and that's not good. Pardon the pun. So this thing's heating up. I'm going to end it off saying this. This is heating up. If you want to know why the market's down, $200 billion of additional tariffs by Donald Trump proposed in 2 months. China says they're going to retaliate. They don't really have the imports to retaliate, and we've just confirmed that they're going to take other measures. So the reason the market's selling off is there's uncertainty. All right, you're a giant institutional money manager that has 10,000 S&P 500 contracts long in your portfolio. You're going to sell some of that, not knowing what's coming. You're just going to have to. All right, and that's where all the selling's coming. If one money manager's got to do that, 10 have got to do it. If 10's got to do it, another 100 are going to jump on board. If another 100 do it, sell stops below from speculators are going to get wiped out. If those get wiped out, swing trader stops are going to get taken out. If those get taken out, investors start to worry. Maybe they'll buy the dip. Who knows? Look out. Today we're selling rallies. There's no ifs, ands, or buts about that. Selling rallies on equities, and we're looking for the oil inventory trade at 10:30. We'll see you guys in the room. Come check it out. You get a 14-day money-back guarantee, and it's extremely well priced. There's a lot of value. and we give you 2 weeks to try it out with a refund guarantee. No questions asked. You want your money back? You go. You don't like to see people make money on a daily basis? You're free to leave. No shackles, no chains. Just open arms. See you later, guys. Good luck trading. Manage your risk this morning. It's going to be a volatile market, but that doesn't mean it's going to be easy. So keep that risk on tap, and I wish you guys the best of luck. I'll see you tomorrow morning, 9 a.m. See you later. Manage your risk, Trade Pro. And now we turn around and open up the room. Thank you. Goodbye. Thanks, Marky. That was a gentle send-off. You know, I like these guys. When you drop the tone and the volume, it implies warmth. Later, YouTubes. See you guys tomorrow. Bye.